Guys, Canada Nickel isn't the only junior in the Timmins region with a billion-dollar plus net present value anymore. Another explorer has entered the fray in an attempt to bolster Canada's production of nickel. And, well, they may not have the backing of Agnico Eagle or Samsung like Canada Nickel. They build themselves as a free agent ripe for investment from a major. And lucky for them, majors appear to like explorers. On top of Canada Nickel recently locking up two majors, FPX Nickel has also recently locked up Sumitomo Metals and Outokumpu, while Talon Metals has secured deals from both Rio Tinto and Tesla. And with an updated PEA now in hand, this fresh explorer just might be finally setting themselves up for such a scenario. Let's dive in. The explorer we're referring to here is EV Nickel, a Toronto-based explorer co currently focused on developing their Carlang A nickel deposit, which is found 30 kilometers to the southeast of Timmins, Ontario. The project, part of the larger Shaw Dome project, is one of two key deposits found on the property. EV Nickel this week released an updated PEA for the deposit, outlining a massive after-tax net present value of 1.48 billion Canadian dollars, or about 1 billion US. For simplicity's sake, from here on out, we're using US dollars. The estimate is based on a nickel price of $20,000 a ton, or about $8 a pound, while using a discount rate of 8%. And while that figure might be slightly above prevailing market prices, their peer, Canada Nickel, has used similar parameters, so at least things here are quite comparable. The study estimates that on a post-tax basis, Carlang has an internal rate of return of about 14%, alongside a payback period of 6 years from the start of production. Figures which, quite frankly, are in line with peers amid the current nickel market. Most nickel mines are long-life assets, and Carlang, at least at this stage of the game, promises to be no different from their peers in that regard either, with the life of mine estimated at 20 years under the current model. Let's look a bit closer at the numbers here. As we've said, the $1 billion after-tax net present value is based on an open-pit operation with a life of mine of 20 years initially. Under the proposed model, Carlang would see annual production of 83 million pounds of nickel, 615 million tons of iron, 36.7 million pounds of chrome, and 31,000 tons of cobalt. Yes, it's an iron mine dressed up and packaged as a nickel mine to get those valuable critical mineral talking points and investor dollars. But that's the name of the game in this cycle, and a game that all the peers are playing. More on that in a minute. Over the entire life of mine, approximately 753,000 tons of nickel is expected to be pulled out of the ground, at an average grade of 0.23% and recoveries of 40.8%. The mill is expected to process 120,000 tons per day, which will ultimately produce two final products: a high-grade nickel concentrate that will be 25% nickel and 0.17% cobalt, and a magnetite concentrate with 48% iron and 1% chromium. Initial capital costs here are estimated at $2.3 billion, alongside sustaining capital over the life of the mine of $1 billion, bringing total capital costs to $3.4 billion or so. Again, that's in US dollars. On a per-pound basis, C1 costing is expected to come in at $4.36 per pound of nickel equivalent, while all-in sustaining costs are pegged at $4.87 per pound of nickel equivalent. Both figures are net of byproduct credits, using long-term pricing and exchange rate assumptions. Annual EBITDA here is estimated at 681 million Canadian dollars, while annual free cash flow over the 20 years of production is estimated at 360 million Canadian dollars, both figures for which the company refused to provide in US dollars, but translates to about 477 million and 252 million respectively using a 70-cent Canadian dollar. Okay, so the obvious comparable here is Canada Nickel, whose Crawford nickel project is found just on the other side of Timmins. Well, they have several other smaller projects across the entire region. But for our purposes, we're going to, very roughly, compare Canada Nickel's feasibility study to that of EV Nickel's PEA for the Carlang A deposit. Yes, things aren't exactly like for like here in terms of accuracy, but we're working with what we've got. Okay, so Crawford has a $2.5 billion after-tax net present value alongside an IRR of 17.1% based on a nickel price of $20,000 a ton. So a slightly higher IRR than EV Nickel, using the same pricing metrics. A key difference here, however, is Crawford is aiming for a 41-year mine life, which adds to that NPV, versus EV's 20-year life. Production here is somewhat similar to EV Nickel too, with Crawford aiming to produce on average 83 million pounds of nickel a year, which is the same as EV Nickel. The difference here is in the byproducts, with Crawford expecting to produce 800 tons of cobalt, 13,000 ounces of palladium and platinum, 76,000 tons of chrome, and 1.6 million tons of iron a year, in addition to the nickel. Whereas EV Nickel will produce 615 million tons of iron, 16,600 tons of chrome, and 14 tons of cobalt a year. Like we said previously, these nickel mines are basically iron mines with some notable byproducts. Because despite nickel being down in the last year or two, it's still a whole heck of a lot more interesting to investors than an iron mine ever will be. All right, so let's wrap it up. EV Nickel's Carlang project is, despite the PEA, still fairly early stage. The study itself was based on indicated and inferred resources, and well, that means they've got to get back in the field with more exploration if they want to move this thing along to the feasibility study phase. That being said, baseline environmental studies have been initiated, and requirements are being examined currently to advance the project along the permitting process. Drilling, meanwhile, is being conducted on other Carlang trend targets to further assess the potential of the entire region. There's more work to be done here, but EV Nickel appears to be getting after it. All right, guys, I gotta say that I really do like companies where the management team is digging in. I've seen so many projects be stillborn where the economics can be a little bit difficult, but there's still a path. And I think the world of the guys from Canada Nickel for continuing to move forward. And I think that they will get there. And so far, I like what I'm seeing out of EV Nickel. So guys, if you're along the name or you have thoughts, please let me know in the comments section. Also, if you could, please smash that like button, subscribe, ring that notification bell. All right, everybody, thanks for watching.